Hi, what's up? Welcome back. I'm Russ. I'm not a financial advisor, so make sure you do your own due diligence and research. Now, with that out of the way, what's up? What are you guys looking at this week? Are you excited for the Fed rate cut? I mean, that's what was on there, right? Did you see the thumbnail? It had the Federal Reserve's logo with cutting in half because they're going to be cutting more than likely. I mean, if they don't, I don't know, life will go on. We'll be fine. You'll be fine. Everything will be all right, I suppose. But they're going to cut. Do you guys think that should be good for dividend stocks, right? It should be in theory because people that are seeking yield are going to want higher yields. And, they come. So, right, that's what we say. When the rates were going up, it made dividend paying stocks look less attractive, which was mainly REITs, right? Kind of like clockwork with real estate. You're getting those income checks, but obviously, if it's in a company, it still could be risky, a lot riskier than treasuries. So I don't know. What do you guys think about that? Uh, it should be good for REITs, but as we've seen, Vici Properties has just been getting absolutely hammered. And I saw some chatter that some people think that uh, Caesars is going to default, which Caesars is, I think, almost little less than 50%. I think 46% ish of Vici's ABR, the annual base rent. Um, who knows? We'll see. It used to be 100%, right? Oh, look at Jeremy. What's up, man? It's been a minute. You get it. We got families, dude. You guys, I've been running. We went to Home Depot. We're late buying a Christmas tree this year. So we went to the Home Depots. Actually, I got a story for you. First off, we went to the Costco because they got Christmas trees, but you can't open them up. You can't look at them to see if it's dead in the middle. So we went to Home Depot's and we got a Christmas tree again. I get a veteran discount there, 10%. So it made it about the same price as Costco's was. So if you didn't know, they got Christmas trees at Costco. Pat, thanks. I changed up the newsletter a little bit. Some people didn't like it, some do, but it's getting a lot more clicks. I do kind of miss the writing. So starting January 1st, at least for me, I don't know if I'll put it anywhere. Maybe I can throw it on the website or something, but I do like writing, and I do find that you learn things a little bit deeper when you write about them because you want to get it right. And especially if people are going to be reading it. But, things slip through the cracks. But Steve, like you said, you could read it. So I share a Seeking Alpha. They give me 5 free articles I can gift a month. And yeah, Steve, before I send the newsletter out, I copy the link, go to incognito mode, paste it, and I'm not signed in. It'll say I'm reading the article and it says, please create an account and all that. So Tony, good to see you. What is APOLL? Let me know if that was. I know some of you use text to voice, and that's why I get called Ross. Dude, what's up? What's up, man? I'm not going to invite you on because my gut instinct was I should invite this guy on, but you got a baby, man. I know what it's like. You're probably chilling, unwinding. Oh, Italy. I don't know about Italy. The Smarta Bears. My wife was saying when we left Costco, you want to go to Portillo's? And we didn't go to Portillo's. We ended up coming home. She pulled some ramen noodles out of her butt, made it in a pinch. So I had ramen. And yeah. Yeah, thanks, Ryan. I did mention you in the newsletter, by the way, because of the Excess Returns podcast that you shared. Dude, I listened to that twice. Just so you guys know, I love it because, Apollo Management. I got you. Michael, it looked like you said, you forgot the O on there. Those O's are so important. But the podcast Ryan shared, Excess Returns, I hadn't heard of it before. And it was just fantastic. One of the things I loved was what Professor Aswath Motorin had said, that a lot of newer investors want to chase those huge returns, those big gains, but compounding and time in the market is what is way more important. So it's important to focus on what you are doing to earn the money to put into the market instead of chasing the big returns. The big returns in time will come the boring way. But a lot of everybody, they want crypto. They want those fast, big gains like we've seen. But, and it was quick, Ryan. It was quick. And he really made me think that is super important. I know you say important. My brain's like, dude, how many times are you going to say important? The compounder's element. No. Oh, that's Lawrence Anderson's book, right? That's the one you were we talked about that. You were reading by Lawrence Anderson, which he did talk with Bogomil Baranowski, which I like that. I enjoyed that one. So, yeah, what do you guys think about the rate cuts? Do you think that's going to affect any of the stocks you're buying? What are you looking at buying? What do you want to look up? I bought more Kinsale Capital this week. And two things. It's interesting because it reminds me of, I think Kinsale Capital was where AI stocks are at, price to perfection. Kinsale's growth has slowed from about 30% to 18%. They're still growing at 18%. They are a very, very solid company from what I can tell. I'm still learning. I got my 3 little feeler shares, and they look like the cream of the crop for the excess and surplus lines insurance. Oh, thank you. My wife, Ryan, has her Las Vegas shirt on, by the way. Ryan's in the chat. He's in the chat. He's in the chat. See, I wasn't kidding.
I don't know which way to go.
I don't know, whatever way. Las Vegas. But what was I saying? Kinsale Capital, by the way. They are dropping like a rock because it's a valuation reset and not so much something fundamental with the company that's falling apart. And that's what we see with a lot of the AI stocks. I think that it looks, and this is my opinion, that they are priced to perfection. And if NVIDIA starts having their growth rate, if it cuts in half, stock's going to get crushed. And that's one of the risks of buying such lofty valuations. But as I say that, I was listening to a podcast and they mentioned how a lot of times us value investors, we can be missing out on some fantastic returns because, yeah, Ryan, right, she does have a distiller shirt. They went back and looked at Google, Alphabet, the parent company of Google. But if you were to have perfect prescient insight into the future and know what Google was going to be trading at today, you could have bought it at a 400 times earnings multiple. We see 50 times earnings and 80 times. We're like, that's crazy. You can't buy that high. And of course, it's so easy to look back, hindsight being 2020 and all that. But that's a very interesting thing to know, that we could have been buying Google back in the day at 400 times earnings and we would have made a boatload of money. So as long as the growth can keep up over time, and that's what I've seen with Kinsale. And secondly, their industry has been very profitable. So they've been attracting a lot of competition. And what does competition bring? Well, probably lower growth, lower earnings. So they always say, and that's another worry, if there's an industry out there that's making gobs and gobs of money and there's just a few players, then more players will come in to try and make more money, right? And it just brings a lot of it's good for the consumer. And they, as Michael Kehoe said, their CEO, that there are companies that are writing premiums that they would take a loss on if they were exercised, and they just won't do that. So they're very disciplined. And it reminds me, and Ryan, you might remember this, of what Warren Buffett would do. Warren talked about this back in the day. He said that they would walk away from underwriting insurance policies because if they had to pay them out, they would lose money. And he didn't want to do that. So Kinsale, without getting too deep into insurance, I don't want to put a lot of you to sleep, but in my opinion, granted, I only have 3 shares, it looks like a valuation reset, and it could be similar with AI. If all this CapEx spending, right? high capex spending is usually not a good thing. And correct me if I'm wrong. Do you think that it is? Oh, there you go. Janice AI coming out with a chip that's cheaper to make. Exactly. It's kind of like they say, right? The cure for high prices is high prices. So more competition comes in, gives the consumer more choices, and then it's almost that race to the bottom that happens. So anyway, that's my little spiel about why I bought more Kinsale. And again, I'm still learning the business. I'm dollar cost averaging in, I'm like I said, 3 shares right now, but new 52-week lows. And again, it's a very important reminder. There's the that's like Pee Wee's word of the day is that so like I like turtles, turbo. Oh, by the way, I promised Alex Mack, he listens and he got on me saying, "Can you please read the comment?" Because I guess he listens on audio and sometimes I just answer what you say. So, Alex, if you're listening from this moment on, I will read all the comments. But anyway, yeah. Who owns Miss Vicky's? Let me know in the comments below or to the side, wherever it is. But Janice, that's interesting. And again, just to wrap up, put a bow on that thought about companies being priced to perfection. Why is there fireworks going off behind me? Do you see that? That's crazy. Oh, there it is. What's the deal with that? I have no idea why that happened. So that's cool. But if somebody would let me know what PepsiCo bought Miss Vicky's. I did not know that. PepsiCo's a giant. Do you guys know if you yeah, right, Chris? It was awesome. If you if you listen to the acquired podcast about Coca-Cola, Coca-Cola had a chance to buy Frito-Lay, which I think is an Atlanta company, just like Coca-Cola. Seems like a marriage made in heaven, but the CEO at the time was all for it, but the board apparently said, "No, we're not doing that. We're not getting into snack foods." And I don't know why those fireworks went off, but hey, that's what happens here. So I guess the point is that we don't know what's going to happen, and it's all about the future. And when more competition, to build on your point, Janice, of Amazon coming out with the chip that's cheaper to make, if the price of chips come down and the CapEx spend isn't giving the returns that people think it's going to, and the growth is not as rapid as it has been, then the valuations will reset. So that's that. And another minute here, we'll get to the news. There's a lot of news this week, so buckle up, Buttercup. I can't drink this yet. I know I'm going to get burned, and I don't want to burn my mouth. So again, let us know what you're buying. What's your top buy this week, or what do you guys want to take a peek at? And now Pepsi owns Frito-Lay. Yeah, and that was in the 60s. So shortly after PepsiCo decided to make the move and go for it. And as you guys know, which I used to share all the time, PepsiCo makes more in annual revenue from the food, from the snacks, than they do from the beverages. So that is very interesting. Tony, I wish we could. Sometimes I thought when I give a thumbs up that I don't know what triggered it, but it's not important. It's not going to help make you a better investor because there's just some fireworks going off behind my head. Yeah, you know what? Ryan, dude, we'll do it for you. We'll make the Procter. I got to get in the habit. Ryan wanted to know, could we possibly pull up Procter and Gamble on Simply Safe at the time? Dude, we'll do it right now. We'll do that first, and then we'll go to the newsy news. I told you I went to Home Depot, right? You know what Home Depot has? It has that certain smell. If they could just bottle up that smell and sell it by the registers, people might wear to Odoo Home Depot cologne, right? Walgreens has a certain smell. Please share with everybody in the chat. what store do you think, no matter where you go, because if I'm in Florida, Chicago, or Milwaukee, Walgreens's always smell like a Walgreens. Home Depot's always smell like a Home Depot. Ace Hardware, for whatever reason, has a certain smell to it. So, yes, this is the live stream where we talk about the smells of your favorite your favorite smells of your favorite stores. So, here we are. I will come back to the news because I promised we'll just shoot that up. Don't shoot anything up. Yeah, Procter and Gamble. So what's been going on with them? I have not dug into this. I sold them in the high, I think 140s a couple years ago. So they have not gone anywhere, but I need to change this to give all y'all more real estate. We like real estate. So they have a dividend safety score of 99, very safe, a super strong credit rating. And I don't know. Let me see if I can tell from the fundamentals. Yeah, that's awesome. They were founded in 1837. Looking at their Oral B. You know, the wife and I were at Costco and we were looking at the electric toothbrushes. What do you got? Do you guys got electric toothbrushes? Let us know in the comments below, because that's where the comments go. 69. Where's Bill and Ted when you need them? Years of dividend growth streak, 135 years of uninterrupted dividends, but average dividend growth looks like it's pacing inflation, just slow and steady. $4.23 per share per year currently. And yeah, it looks like it's undervalued. So why is their dividend yield almost 3%? It's because the stock price keeps dropping and it's at a new 52-week low. I was reading that article by Austin Rogers, and he said that was one of the problems with SCHD's reconstitution was it went heavy into the energy stocks and then financials and consumer staples, I think. But this is a solid company. I'm sure we're not going to find too much wrong. Make it a little bigger. So these give you a 10-year look back. Each one of these bars is for the whole year. So it's kind of nice to see the trends. Free cash flow payout ratio. And you guys know I love the free cash flow payout ratio because you don't get earnings per share in your brokerage account when the dividend is paid. You get cash. And cash is coming from the free cash flow. It's not coming from the earnings per share flow because that's an accounting metric. So I love the free cash flow, right? And I'm going to beat this into your heads. With the free cash flow, you can pay a dividend, buy back shares, carry it as cash on the balance sheet. You can do things like mergers and acquisitions, reinvesting back into the business. Those are the major things that you can do with free cash flow. So it's very important to a business. And their free cash flow per share slowly rising. Sales growth has dropped. I'm trying to see why they're so beaten down. If anybody is thrown into the chat, I'll get to that. Before I take this hat off my cat, and I don't care what he thinks about that, revenue has flattened. Many investors, professional investors that I've read, love growing revenue because if you want a growing business and a growing dividend, you need growing revenue. But a company with flat sales can still throw off a lot of cash. It just might not be growing, and the stock price probably isn't going to grow. So that might be one of the concerns is that, yeah, the sales are flat. Gingerly buying back shares. Yeah, they're just a solid company. I don't know where the growth is going to come from, though. It just looks to me like it's going to be that super mature, stable company throwing off cash, which is great for retirees. But as we see, if you reinvest into the stock with Aries, it beats the S&P, ARCC. Yeah, margins are all fine. Low debt. 33% of their capital structure is net debt. Yeah, Ryan. I mean, just they could use Munger's bullshit earnings to pay off the net debt. Their earnings before interest, taxes, depreciation, and amortization, EBITDA. It would take Procter and Gamble, currently 1.10 years of EBITDA to knock out their net debt. So their balance sheet is rock solid. And yeah, that's why they get a 99. But I do need to do news. Oh boy, I blossomed out. Happy Canadian Dividend Raise Day. All right, that's where we left off, November 26th, which is the day I met my wife. 25 years ago in Chicago, we met, and we got married 20 years ago. So Parker Hannifin, this was one of Kevin Burgess's companies. They bought an electrical vehicle controller company and battery management. Curtis, they acquired, and $880 a share. Man, I should have bought them too. They came on my radar a while ago because in my business, we use Parker hoses, hydraulic fluid. They have a hydraulic fluid arm of the business, not the Nucor. They bought CHI doors. That's also in my business, but they're dividend king, super slow dividend growth. Nucor raised that dividend a token 1.8%. Simply Safe refreshed their outlook on EPD, Enterprise Products Partners, which I had owned, and I've been waiting to see it under $30, and I'm considering buying it in the taxable. Who owns EPD out there? Let us know. Multi-utility company DTE raised that dividend 6.9%. We're going to go a little faster here because we got a whole hell of a lot. Enbridge, pause the video if you want to read these anymore. It's the best I can tell you. Enbridge raised the dividend 2.9%. Looks overvalued. Here to go. Slew of Canadian banks. Royal Bank, right? Royal Bank of Canada, ticker RY. I always want to say RBC. Raised that dividend 6.5%. Could be overvalued. They reaffirmed the borderline safe score of Alexandria. A lot of you guys ask about Alexandria. Are you buying them? Carrier raised the dividend 6.7%. I know Ian likes Carrier. I think he said 200% they've raised the dividend since the spinoff. They reaffirmed the safety score of Hormel. So shout out if you've been to Austin, Minnesota, and you've been to the Spam store, which they've been getting crushed. Yikes. Hormel. Issues, we've looked at them, but they reaffirmed that score. BMO, Bank of Montreal, 2.5% dividend raise. Is that crazy? They've paid dividends every year since 1829, coming up on 200 years. I can do that math because I went to public school. CIBC, which is the name of this Canadian, I don't remember. This isn't National Bank is the one that Mike, the dividend guy, likes. 10% dividend raise. And I think there's one more Canadian. Yeah, TD. Hey, who sold TD when the money laundering scandal broke out? I did. So yeah, it didn't work out so well. They raised their dividend 3%. They're almost at $90 a share. I think I sold it in the high 60s. Oh, well, I didn't lose any money. Old Republic, they refreshed their outlook. Some of you are buying ORI, property and casualty insurance. Similar, but not exact as to what Kinsale does. Dividend downgrade. Last live stream, someone wanted MAA or two ago. They got downgraded because there is a softer leasing environment, but they could be undervalued. Who owns MAA out there? Is it Mid-America Apartments or something, right? Ecolab, solid company, raised their dividend 12%. Hey, they're actually reasonably valued. I'm going to have to throw them on the watch list because they're solid, and I used to work at one of their businesses. All right, here we go. Two more. I know, it's a slog. WEC raises the dividend 6.7%. They're Wisconsin Electric Company. And I think this is the second to last. No, last one. Eastman Chemical raised the dividend 1.2%. And some of those specialty chemicals, I got out with LyondellBasell. All right, let's see what y'all have been Hey, that's a good one, Dresh. Menards does have that unique smell to it. Stacking cash in case SpaceX goes public sometime this year. That's interesting. I'm a user of Claude, Ryan, as you know, and there's talk that they're going to go public in 2026. Yeah, if anybody, let's see if any of you know why Procter and Gamble has been. Oh, it's funny you say that you had 100 shares Nvidia put to you last week. Oh, you got in on the 1 cent dividend. Yeah, it's so funny. If you were to wanted $100 in dividends from Nvidia, I don't even remember what the number was. I think it was millions, either millions of dollars or millions of whatever it was. You would need a wheelbarrow or a dump truck to carry all those shares. What's up, Adam? Thank you. Who is getting sued by the city of San Francisco? I'd like to know. Turbo does have an electric toothbrush. Hey, you put companies you might be wanting to buy in your mouth. So who owns Oral-B? I don't know. Oh, Adam, so you don't have the electric toothbrush. I told my wife it feels like a bit of a scam because you have to buy the toothbrush, and then you have to buy the replacement heads. Yeah. Hey, thanks for sharing about the Philips Sonic, Rich, because that's one of the ones we were looking at, and it was at Costco. But I said, we better sleep on it. I told the wife, we don't buy stuff right away. We're going to sleep on it. Lucas doing the dishes and use it for the news you can use. I hope it was. It's just Simply Safe Dividends news. I mean, obviously, you could fill 8 hours with all the news that's out there every day. Look at this. Mo, happy Canadian dividend raise week to you, if for those who celebrate. Ryan's been buying Vici, I think, too. Yeah, the yields. So Vasco said he's low too much on Vici and PG in the weeks. Look to other opportunities. And that's another interesting thought you bring up, Vasco, because I am so attracted to companies that are way beaten down. And it's just so damn hard for me to look. I've been looking, believe me, Costco, Rollins, TJX companies, TJX in particular, it's in the 150s now. And it's like a broken record. I've said this in the 120s, 130s, 140s, and now 150s. I'm going to wait for a pullback. So there's a thought out there with some investors that they say, don't look for those beaten down deep value names because they're beaten down in a deep value name for a reason. It's better to look for the industry leaders, the high quality industry leaders, and buy them on a dip. When you see them dip, you buy. You don't wait for them to get crushed. So that's kind of what I'm doing with that. They do, Jeremy. They do dividend stocks in Europe. If you have a few, let me know. Mo congratulated Ryan on the new addition to his lovely family. And then I saw Ryan with a comment on ROIC. And I thought maybe he was talking about his baby daughter, his baby girl, with a return on invested capital in that. So it is an investment. The kids cost money, but a little personal note. It's been my daughter's bowling again. So first 2 games were this week. And hey, she was the second best on her team and the third best out of the whole everybody that night. And in one game, she bowled a 226. So shout out to her and the $200 lessons we've been sending her on. So that's an interesting point. Steve says 2.95% that Procter & Gamble is yielding is not that great for retired people, though. I would agree, and I'm not retired, Steve, but I would also think you want stability of that income, right? So if anybody is, then let us know. Yeah, Mo's commenting on 25 years. I met my wife 25 years ago in Exit, Chicago. It was Saturday nights, and it was on a dark, crowded dance floor. The secret to a strong marriage. Dude, I got lucky. I don't know. Yeah, we have arguments at times and we don't agree on things, but it just always works out. And I don't know, man. I know everybody wants to say communication and talking, and sometimes I suck at communicating, but I don't know. We figure it out. So I guess I think because everybody's different and it's just a determination on both sides to want to work it out and make it work. So you either do or don't, I guess. Maybe that's the key. Thank you again, Ryan. I always say that on Kevin's. It's funny. There'll be a handful of people, way more people watching than there are likes. And I tell him, dude, you have to, everybody hit that like button. So did anybody else panic sell? I wanted to know Toronto Dominion. I'm so surprised with Toronto Dominion that it did what it did. But you know what? Rich, I don't know. It could be, it could not be. But what I am confident in is 20 years from now that it will be much higher. So that's what I am confident in. And why? Like Warren would say, it's a bet on innovation of the companies that are in the United States of America. That you're going to expect them to keep growing, keep innovating, increasing their profitability. The ones that haven't come around yet, that do, they'll grow and get a higher weighting in the S&P 500 for market cap weighted purposes. And then those that don't, they just fall away and are replaced. So it's rental, right? That's the housing market is loosening up though, I think. So Tux Cat. Oh, what's up, Tux? You are my Air Force guy, right? I believe. You retired from the Air Force, as we called it, the Chair Force. You're right. So Tuxcat says Procter & Gamble is in the gutter due to consumer shifting to private brand, though I think there is no better cleaner than Tide and Gain. That is also very interesting because we've seen that with Kirkland, and there's Walmart's Great Value brand up and up. I think Target has a few. They do say that they've I believe they've been seeing increases in their private brands. And yeah, PepsiCo too. PepsiCo's been dropping. Ooh, that's interesting. I think somebody asked me that once. What is a company I wish that was publicly traded? Right? I think Chick-fil-A would be one of the easy answers. I don't really eat there that much, but every time I drive by a Chick-fil-A, the place is just jam-packed. Buffalo Wild Wings, I think, used to be public. I used to eat there a lot, but yeah, I think that's one. Oh my God. I don't know if they ever will go because they're a family business. I think Chick-fil-A is still family owned. So if they went public, then right, you might get more money to expand and grow, but you're also going to lose control of the business because now you have a board, and you have shareholders, and I don't know, maybe they'd have to do two different share classes, one that's voting so they could maintain. I think Brown-Forman, the liquor company, Brown-Forman, I think that's why there's BF.A and BF.B. Whichever one it is. I think the A shares, the Brown family owns the majority of. So those are the voting shares. And I think they have a little bit less liquidity to them. So there's a slight price discrepancy. But I believe the Brown family has the majority ownership of the A shares, which are voting shares. And kind of like Berkshire, where I don't think the B shares are voting shares either. So the B is if you don't care, you just want to be invested in the company. Ooh, San Francisco is suing Mondelez. Why? Vasco wants to load J&J and Prologis. I miss the J&J, but you know, you guys know what happened with that one where I sold to buy a car. If anybody doesn't know, let me know. Oh, Starlink. Adventures with Dana Jody. You guys, that name sounds familiar. You guys have a YouTube channel, don't you? I believe. In and Out. I ate In and Out for the very first time when I was in Las Vegas. Had the double double. It was okay. It's no Portillo's though. I got to tell you, it's definitely not like Portillo's or Gino's East deep dish pizza here in Chicago. You got to eat those. Beak, I have no idea what Strava is. What is Strava? Ah, if you guys haven't, check out Founders. David Senra of the Founders podcast just started doing sit downs with founders, which is awesome because he used to just read books and talk about founders, but now he's doing sit down with them. Obviously, the ones that are alive, unless he's figured out a way, maybe he can contact. That's what I'm going to start doing. I'm going to I'm going to do an exclusive interview with Ben Graham via a Ouija board. And all kinds of hijinks ensue, right? We are not, I won't play with the Ouija board, don't worry, but Raising Cane's very, very good interview with their founder, whose name escapes me. And interesting story. Speaking also of founders, Jensen Huang was on Joe Rogan. I shared that in the newsletter. Oh my God. I had a long job and it was great. I just get lost in it. And I felt like I was watching a movie in my head as I'm listening to Jensen tell his story. It was crazy how many times in video was on the verge of just going away and being a company the world never knew, never heard of. But yeah, PTLO, they got to hit a bottom sometime, Adam, right? I got my 200 shares. I said I would buy 100 more if it hit $4 a share. I don't know if it'll get there, but that's, how about this? Do you guys have any fun stocks you own where you just you like the idea of owning it? You just enjoy owning them. That's what is for me with Portillo's is owning this company. They're in Chicago. They're kind of fast casual, just a staple in Chicago. But the rub is that they're trying to expand all across the country and they went a little too fast. Peter Lynch would share with companies that you can't expand too fast. It really could damage the longevity and the growth, the long-term growth of the business. So yeah, they've kind of been dialing that back. They still haven't announced the CEO. They don't pay a dividend, but I enjoy it. I love every time that I drive by Portillo's, seeing how many cars are there. That is fine. But yeah, what is Strava? Oh, so it must be a Pat says, do companies ever report on the drip of their dividends and the effect on their payout ratio? I don't think drip would have an effect on payout ratio, right? Because all that they're doing, they're still paying out the dividend, but it's not going to affect the ratio of who buys the shares, right? Unless I'm missing something, Pat. Don says, thoughts on bank stocks. Many have 6% dividends and still have grown 70% value over 5 years. Honestly, I think I could have made. There's the fireworks again. What is the deal with the fireworks? Anyways, Charlie Munger made a great point where he said that banks today are very difficult to understand. And it's not like when they first started buying banks, right? They bought Rockford, I think a bank in Rockford, Illinois. Gene A. Beck was the guy who had run the thing for many, many years, and they kept him on board. But I kind of thought he was right. And I just decided, you know what? What do I really know about banks and all their ways that they make money? So I looked at SCHD. There's a decent amount of banks in SCHD financials. So I said, okay, but yeah, honestly, Don, I kind of gave up on banks just because I don't know that I understand them terribly well enough to be very certain about their future. So Adventures with Dana and Jody, you do have a YouTube. Oh, wait, we did? Oh, man. Oh, you're in Sterling, Illinois. Now I do remember you. I'm sorry, dude. I'm looking at this tiny little avatar. I guess we did. Dude, we should have talked more. I'm guessing that Strava is a running shoe. Ryan's been you what yeah, how many of you are runners? I don't know what Strava. This is the first I've heard of it, but Nike is one that I'm thinking about that one hard. I think they can turn it around, but again, there I am sitting with turnarounds, and if I can break even, I might consider just moving into something that has a little bit higher growth potential. But you know what? As soon as I sell Nike, make sure all of you buy because it's guaranteed to get on a rocket ship. Turbo's favorite stock is Walmart. Favorite store and best performing stock. Bought a large amount when it was at 60. We bought some for my daughter's custodial account, and we've been dripping that. Yeah, it's her best performing, well up over 100% for her. Klarna, aren't they the buy now pay later? And 200 of CubeSmart, their fund swing shares. Yeah, I don't get Klarna, the buy now pay later. Isn't that just credit cards? So I don't know exactly how they are real different, but yeah, that could be harmed if we go into a recession, correct? Oh, Strava is a running app, 50 million monthly active users, and has a similar business model to something like a Spotify with free and paid tiers. Well, I don't run, so Tony we'll say a prayer for you. We'll say a bacon prayer, hopefully. Oh, random fireworks on your YouTube channel, especially me in a video is performing exceptionally well. Well, I guess I'll take it. Here's me. Shows you what I know. I'm thinking like I was holding like the thumbs up. I'm like, that must have done. Okay, there we go. You can see what I'm learning here. Ah, Ryan only wears Nike running shoes. He's getting 2 more pairs for Christmas. Well, it's no fun if you know you're getting 2 more pairs for Christmas, man. Yeah, but I'm thinking of it. I was texting with Brian Bollinger from Simply Safe Dividends earlier in the year, which is crazy to say because that was about 12 months ago. And uh, that was it was mid-January, and he said good luck because I think he said he had 2 forays into the apparel space. One was VFC, which didn't turn out well. I forget the other one he said. I can't remember, but he had 2 companies and they both did poorly. So he said any kind of apparel company is, he says, it's too fickle. It's too hard to predict what's going to happen. So, you know, I think he could have, there could be something to that. But what do you guys think about Nike? Would you touch Nike? Would you buy them? Elliot Hill is on board. He's a veteran. He's been with Nike for over 30 years, and he is trying to turn that business around. But a lot of times the turnarounds don't turn, yeah? How much I love Target. It's on the radar. It was. I sold it a while ago, but my life likes Target. But she loves doing the curbside pickup stuff. Sends the kids now to do it. Coop says thoughts on selling short-term positions in brokerage at a small loss. Plan is to use the money to fund HSA for this year. Just got new insurance at work and got into the HSA starting in December. Coop, so I'm not a financial advisor, not a tax professional. I can just give my thoughts, which could be completely wrong. But from what I understand, you're talking about tax loss harvesting. So as long as you don't buy those same or like, I think is how the wording goes, positions for 30 days, then you won't violate the wash sale rule. And you can claim that you can offset capital gains, right? So it could be good. You could sell at a small loss. You'll be offsetting capital gains. And so any dividend income coming in. And HSA is fantastic. We just got into an HSA for the first time this year because my work just started offering one. And the thing that I know about HSA, I don't want it to be HSA hour, but it's like the triple whammy, I think is how they say it, because the money is tax deductible that goes into the HSA. It grows tax free, which is number two. And when you use the money for a qualified medical expense, you don't pay taxes on it. So it's like a triple benefit and it stays with you growing forever. Also, it can be another almost like a Roth in a way, because from what I understand is if you save all of your receipts, sorry, there's a commercial on. I got the TV on. I can't help it. But if you save all of your receipts from medical expenses throughout the years and keep details, like keep them in a spreadsheet and hang on to them in a file folder or whatever, then in the future, when you reach retirement age, or at I think any point in the future, it doesn't have to be retirement. I belay my last on that, because you can pull money out. Say I had a $200 medical expense in 2025. Well, instead of using the HSA money for that, that $200 can keep growing for 20 years. And then 20 years from now, I can pull that money out, the exact amount on the receipt. And if you ever get audited, you want to keep those receipts to show, no, this was a medical expense and I'm pulling it out of the HSA for that. So kind of an interesting little quirk that people don't think about. And we save all our medical receipts. We don't use the HSA. We used it once, but because they give you a little card, like a little debit card, whatever that you can use. But Ryan doesn't dislike Target. It's honestly a very tempting stock because it's so cheap with great dividends. The funny thing, Ryan, I don't know if you agree about Target and Brian Cornell. He's still, I think he's the chairman of the board. So it's weird that he was CEO and chairman of the board. Now he's chairman of the board. And the new CEO's name escapes me, but they always blame put it this way. Everything that Target says is why the stock underperforms and their earnings are down and revenue, whatever is down. Walmart never mentions that. Walmart doesn't seem to have the problems that Target does, and it's been going on for years. So yeah, it just seems structural with Target, and I'm just going to stay away. Let somebody else. Turbo said he would never touch Nike. Never, ever. Dogs Cat would buy more McDonald's before Nike. Hey, McDonald's has been fantastic, you know? Look at that. A lot of you are anti-Nike. That's interesting. Favorite shoe brand is Skechers. Aren't they publicly traded still? Or did they go private? They went private, didn't they? They're not coming up. I swear I remember them being publicly traded. I wonder who bought them. Adam, he says Nike's a great brand. Give it 10 to 20 years. They'll be fine. Probably, but I think if I had a pick between Nike and if I see a good dip on TJX, probably picks TJX, because actually TJX is going to be buying Nike's excess inventory, things that they want to clear out, they want to get rid of. Isn't that so cool? Why a company like TJX does so well? All the retailers or all the fashion companies that have inventory they need to clear out and get rid of, they're selling it to TJX for pennies on the dollar, and then TJX can sell it to us for cheaper than manufacturer suggested retail price. So that's why TJX and Ross and Marshalls, which by the way, Marshalls and TJX, they call that Marmax. That's their segment because it's so big. Marshalls and TJ Maxx, Marmax. That's why it does so well, because they're just buying stuff that the companies like Nike want to get rid of. But yeah, I would rather own TJX. And they say you should do that. You should act as if you were just, somebody gave you your portfolio, what would you change? Would you would you get rid of stuff if you didn't have that endowment effect? If the endowment effect, right? When you buy something, you assign like a higher value to it because you own it. I do it all the time. Working on it, working on it. Mr. Williams says, especially true in the fitness space where there's so many brands popping up. It's becoming hard to differentiate in a lot of ways. By the way, didn't you guys live stream today, Ryan? I was out shoveling more snow, almost 3 inches. I'm getting tired of shoveling. My snowblower broke. It's old and it's rusting, and I don't think I'm going to try and fix it. And I'm cheap. And when I was at Home Depot, all the snowblowers they had were over $1,000. So, anyway, I was out shoveling when I think I saw you guys were live. Oh, that's a good point, B Hall. Yeah, and sometimes I forget. I'm not like SCHD Stan. We should test them. I wonder if he has all 100 some positions memorized for SCHD. It's true. Anybody can Google this. If you Google by revenue, the top athletic brands, Nike is double number 2, which I think number 2 is Adidas or Adidas, right? That you hear it? That's me, Adidas. So it's Adidas because Adolf Dassler, I think was his name. Adolf, they called him Adi, Adi. And that's the name. He took 3 letters from the first, 3 letters from the last, Adidas. By the way, 2 brothers, the Dassler brothers, bitter falling out when they were both at Adidas, or maybe it was the company before. Anyway, point being, they hate each other's guts. They're both dead now. They hated each other's guts. The other brother went and started Puma. They stayed in the same town in Germany, and they lived at opposite ends. They didn't talk to each other. They wouldn't go anywhere near each other. They're buried in the same cemetery at extreme opposite ends of the cemetery. They never made up, but yeah, Adidas. I say Adidas is number 2. Beak might be more. Yeah, I would like to add more Vici, but that's a good point, Charles. I don't know exactly on that. I believe so. Yeah, and that's why I told Coop, you got to do more research, man, because all I know is that we had it offered to us. They actually give us a match from the company. I don't remember what I think we get. I don't remember the percentage, but I think it works out to like $1,000 every year they give us, maybe a little more. So it's free money. And yeah, it's taken out of my paycheck every week. And we took out as much so it would max out at the end of the year, right? Just took isn't it 4,000? I think it's 4,000 you can put in. So we took the 4,000 divided by 52, and that's what we're putting in a week. But then for me with Vici, it's in my self-directed IRA, which is locked, meaning in 2020, we rolled $30,000. It was a non-taxable event from the 401k into this self-directed. It's just an IRA over at Schwab because I wanted to think I was so smart and I could do better. And it's almost doubled. It's right at the point where it's I think 59,000. I've made a lot of mistakes, so it could be so much. Probably if I just bought VTI. Do you know if a 529 plan would be taxed? No, Alan, I don't know all of them, but ours is not. I don't think there are any because it's not for retirement. It's for college. It's for kids' college, and we have it for our kids. But I asked the plan administrator, which is Bright Start here in Illinois, if it's tax deductible, and they said no, it's not. I love this. Yeah, please do share your thoughts. I know we're almost wrapped up, but share your thoughts about HSAs. I'll scan through and read them. No, hold on, Eddie. If you don't touch the money until you retire, it becomes a proxy traditional IRA with no RMD when you make unqualified distributions. Very interesting. Eddie, I think what you're missing is that it's invested. So it's going to compound and grow. So that $200 is not stagnant. It's not in a treasury. It's in the market. It's in the market growing and compounding. And that's the power of it. So that 200 in 20 years, I don't know the math. We'll just for simplicity's sake, maybe it's 400. So why not? Why not just leave it in there as long as possible? So, and that's true, but that's why we want to let it, that's why we want to let it sit in there because it's going to grow. Skechers did get bought by private equity. Okay, good. Thanks, Coop. You can fund the HSA through a linked bank account and then deduct that off taxable income if you itemize your taxes. Good. And I know I wanted to open up an HSA years ago and I called HR. They said you can't do that. I think I called Schwab. Oh, no, I called Schwab. I called Schwab. They said you can't do that. It has to be through your employer. So call your HR. I called HR. They said that's not offered. And then all of a sudden this year it was offered. So thanks, Bubble. Appreciate that. Any non-dividend stocks I would buy to begin? Oh, if they begin to pay a dividend, maybe it depends. But again, I'm trying to get to the point where I'm not only buying the dividend. I'm buying the company that happens to be paying the dividend. So we want the solid company first and never to buy just the dividend, at least me. I speak for myself. Let me see what else you guys got. I don't know. Did Caitlin Clark sign with Adidas? Maybe. They all seem to get, oh yeah, that's right. Stop selling Yeezys. Well, the guy's a lunatic, right? Wasn't he being anti-Semitic? I don't know. I thought, or am I thinking of someone else? That's Yeezy, right? He was selling swastikas or something. Not liking does. What's my thought process behind not automatically reinvesting dividends? Personally, it's probably the smart thing to do, but I like to, well, what do I say? I kind of say I like to let the dividends collect and then cut it with new cash. Just meaning, adding cash. Anyway, yeah, I like to strategically redeploy them. So for instance, in the self-directed IRA, when I get the Aries Capital dividends, if Aries Capital is above its net asset value, which as of the last quarterly earnings report was $20.01. If Aries Capital is above, I don't want to buy more shares. So I like to collect the cash, sit on it, see what's what, but I probably will buy more Vici. Yeah, I think, you know what, Tux Cat? I don't know. So can you do it at Fidelity? You can just open an HSA and fund it? Because unless the rules changed, and it's been a couple years since I called Schwab and asked them, can I open up an HSA? And they said, no, you can't do that. So maybe Fidelity lets you. I don't know. But anyway, that's super, super interesting. Well, I didn't get to look up any stocks for anybody. I did. I looked up Procter and Gamble for Ryan, but it's about that time, It's for last comments, last call, right? Last call. Oh yeah, that's it, Tux Cat. Sorry. I wanted to get this is important. You said as long as you have a high deductible healthcare plan, right? You've been doing it for 5 years. That was the thing. We didn't at the time have a high deductible healthcare plan. So health insurance plan. That's I think what the rub was, why I couldn't do it. So I guess now we do. We've changed insurance. We're with the United Health now. Yeah, HSA through employer must have a high deductible plan. Yeah, and that was the thing. Again, yeah, they said we didn't. Just remember, you're going to get, yeah, you finished the thought for me. Coop said he wants to get into EPD, but he's going to wait till 2026 so he doesn't need to worry about the K1 for taxes this year. And that affects my wife. She does her taxes. So, yeah, no K1s for us this year either, but it is nice. It's a nice thing to have that it's tax advantaged. And, well, we won't get into the whole master limited partnership structure and how that affects taxes. So, well, ladies and gentlemen, thank you for, I can't believe how oh, well, Ray, I'm so sorry, man, but we keep it to an hour. That's for you and for me. You don't want to hear me blather on and on and on unless you're trying to cure insomnia. So maybe next time, Ray, set your alarm to jump on. And hey, I love you guys. Thank you so much. I really do hope to see you again in the next one. And I promise we'll look up more stocks this time, but I think it was fun. Talked a lot of interesting things, especially those HSAs. So if you have, call your HR. If you have access to an HSA or you need to do it. You need to do that HSA. So Janice, everybody else, thank you so very much. I appreciate you. And I'll see you in the next.